The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. My name is Joe Bacella, Director of Client Success with Chaikin Analytics, and I'd like to welcome you to How to Find Great Stocks in a Tough Market. Our presenter today is Sandy Chaikin, co-founder of Chaikin Analytics. A bit about Sandy. With no prior experience, Sandy started investing in 2012 with Chaikin Analytics and built a killer portfolio that outperforms the S&P 500 and most money managers. She spotted the two best performing stocks of 2015, American Woodmark and Activision Blizzard, both stocks rising over 94% throughout the year. Sandy's living proof that you don't have to be a financial expert to pick winning stocks. She presents webinars and speaks at industry events on fearless investing by following the Chaikin 5-step method. Sandy is a contributor to NASDAQ.com, where she also hosts webinars on investing. Prior to co-founding Chaikin Analytics, Sandy had her own marketing and communications firm and a career that spanned over 30 years. She's held senior management roles for Elizabeth Arden, L'Oreal, and the Franklin Mint. She is a member of Elevate, a global professional women's network, and Women in Investing Network of Philadelphia. Throughout our presentation, please submit your questions throughout the GoToWebinar chat window. We will hold a brief Q&A session at the end of today's session. This webinar is being recorded and will be sent to all registrants. Now, to begin, I'll turn it over to Sandy.
Joe, thanks so much, and welcome everyone to How to Find Great Stocks in a Tough Market. I think you'll all agree this is a very tough market. They're saying now this is the worst week since February 2009, so the topic is very timely. Okay, so let's get started. I just have to get this little housekeeping disclaimer out of the way. We are not a registered broker-dealer or advisor, and we're not registered with the SEC or with any regulatory authority. We don't recommend the purchase of any stock or advise on the suitability of any trade or investment, but the information we present is generic in nature and strictly stock research. For information only. So users are responsible for determining their own suitability on investment research and decisions. Okay, got that out of the way. All right, I always like to start with kind of framing the conversation. And I always like to start with a problem. You know, what is one of the biggest problems we're facing today? When I've asked this on the last couple of webinars, the answers have been a lot around volatility, trading on emotion, how do I preserve my capital, how do I protect my portfolio. So a lot of what we're going to be talking about today is going to frame around that, around those challenges. But what typically happens is that investors run for the exits whenever there's a market drop. And Dalbar research has shown that that has actually costs us about 4% a year. Why is that? Well, it's because doing a lot of trading is not in your best interest. It's better to sit and wait some of these spells out. And they've also proven that the mean recovery time for market corrections over the last 50 years is about 107 days. And by market correction, they mean any 10 to 20% change. Anything over 20% is considered to be a bear market. But in these corrections, like we're facing now, where the S&P is down 13% from the May high, so we're not in bear territory, we're in a correction, as the term goes. So I'm going to walk you through how I don't panic, but I actually profit in this type of market. And I'm going to give you the confidence and the tools so that you can do the same thing. So let's step back a little bit and look at the historical performance of the S&P 500. There's a number of different ways people have looked at this, but it basically all comes out to the same 7% a year. And I'll use the Warren Buffett quote here because he's saying for the last 60 years, adjusting the S&P for inflation and dividends, the average annual return comes out to exactly 7%. We know last year was flat, and we know this year is not off to a great start. We're down 8-9% on the S&P 500 year to date. But on average, this is what we can expect over time. However, there are mutual funds today that are performing far worse. I mean, they are in bear territory. They are posting losses of 20% or more. PIMCO, for example, the PIMCO Emerging Markets Fund is down 54% since its May peak. Remember, I'm comparing that to the S&P, which is down 13% since its May peak. Templeton Foreign Exchange Fund is down 37% with a hefty 6% sales charge to boot. Vanguard International Value Fund is down 34%. Dodge & Cox International down 40%. Dodge & Cox Stock Fund down 24%, over 2 times the S&P decline since May. And the average large cap fund is down 15%. So for those of you who have put your money in these funds and are paying a fee for this, you're getting a double hit here because they're underperforming the market and they're really in bear market territory. So what's the alternative? You know, how can you protect your portfolio and see it grow rather than decline? Well, our methodology is to pick great stocks. And we're going to spend the next 45 minutes or so going through the methodology for how I pick great stocks. And hopefully by the end of this presentation, you too will have the confidence to do the same thing. But these are a slide of some of the stocks that I either own currently or have owned over the past year. Typically, we tend to go with companies that we're familiar with. I doubt any of you are familiar with any of these other than perhaps Activision. But for instance, Procter & Gamble is down 12% this last year. American Express down 28%. They just reported earnings, better than expected earnings. I just saw it come across the tape 5 minutes ago, and it's down 1% after hours. Walmart down 26%. Alibaba, big talk about the whole IPO on Alibaba a couple of years ago. That's down 19%. Yahoo down 32%, and Apple, of course, everyone's favorite, was down 3% last year. So going with stocks that you're familiar with or have a personal affinity towards is not necessarily the right thing to do. You're better off knowing how to find these stocks like for Solar or Walker Dunlop, American Woodmarks, companies we've never even heard of. Until we start doing this type of research. And I'm going to show you how to find these because there are still some gems out there. These are the little golden nuggets. We just adopted a kitty from the shelter and her name is Nugget. So I like that term, golden nugget. But I'm going to show you how to find these golden nuggets. So it all stems from confidence. I'm a big believer in that you must have confidence in yourself in order to be a good investor. Because if you don't have the confidence that you can make these types of financial decisions, either you're not going to make any decision at all, or you're apt to make a very poor decision. So, the underlying factor is confidence. We've got to instill confidence in ourselves in order to make really good decisions. And I think you'll agree with me by the end of this presentation when you see the methodology and the approach, you'll have the confidence that you can do this too. But it's all about finding winning stocks. And it's great to find winning stocks to obviously generate revenue towards retirement or school or college or whatever we need the funding for. But it's also important to celebrate. And I've started to put more emphasis on celebrate the older I get because I always used to kind of stash my money away into savings and 401k plans. But I'm getting a little bit better about spending it, particularly since I've been making these profits. So the profits that I've made from these stocks that I'm going to go through today have really enabled Mark and I to take some great vacations. That top right picture is from Turkey. We went there in August of 2015, and that was all because of the profit in one stock, Southwest Air, that I bought early on and sold and made big profit, and that profit more than paid for our 2 weeks in Turkey. The bottom right is Vail, where we went this past August, and that was to attend an international dance festival because I'm a big fan of the performing arts. And on the left, you'll see the coast of Italy. So we are looking forward to planning a trip to Italy in the spring. and use some of the profits that I'm making on the stocks that I'm going to share with you today. So why should you believe in me? Well, the Wall Street Journal has reported that 4 out of 5 professionals have underperformed the S&P 500 for the last 2 years. And since I've been investing in stocks in 2012, I've been outperforming the S&P 500. Thus, I'm outperforming 4 out of those 5 pros. I found the 2 best growth stocks in 2014, Southwest Air, which is love, up 126%. That's what funded our trip to Turkey. And Skyworks, which provides chips to Apple. That was up 156%. I had big positions in both of these stocks. And just last year, I found American Woodmark, which was up 98% for the year, Walker Dunlap, up 64% for the year, and Activision, up 94% last year. Now, mind you, this was in last year. We all know the S&P was flat. So you can see, you can find these, if you can find these nuggets, you can really outperform the market. And all this I do in 15 minutes a day. And I honestly, that is the truth. People say, "Are you sure?" I don't see how you can do this in 15 minutes a day. But I honestly do because I have a methodology that's very efficient. I invest at any given time in 8 to 10 stocks. And I keep a separate list of stocks that I watch, which has typically 20 to 40 stocks on there. And I scroll through these lists a couple times a day and look at the charts. And that takes care of my 15 minutes. And I'm able to monitor my portfolio, make any adjustments that I feel are necessary, and maintain a great portfolio. So let's step back a second and let me just walk you through how I started investing in stocks. It all started with mutual funds through the 401k plans that I had at the companies I was with. I worked in New York for Elizabeth Arden and L'Oreal, and then outside Philadelphia for the Franklin Mint. They all had 401k plans with choices in either the Fidelity or the Legg Mason funds, which were great. I was in Fidelity Magellan Fund for a long time, which was outstanding, and Bill Miller's Legg Mason Value Trust was a fantastic fund as well that I was able to profit very well with. But it didn't last forever, and I thought as my 401k plan grew and as my career got busier that I needed a professional. So I asked around some of my friends and was referred to a gentleman and met with him and turned my portfolio over to him. The mistake I made is that I didn't stay engaged. And we just had a session last week, Women, Wealth and Empowerment, with 6 incredibly smart speakers. And they all said, you must stay engaged. 4 of them were certified financial planners. And they said, regardless of whether you work with a financial planner or not, you really must stay engaged. That was one of the key messages that came from all of the speakers. And I didn't do that. That was a mistake that I made. And I'm sharing that with you all so that hopefully you won't make the same mistake. So if you are working with a financial advisor, that's great, but just stay involved. Question those stocks he's suggesting or she's suggesting, and keep track of what your investments are doing. Because what happened to me was along came 2008, and I don't have to remind anyone what's happened there, and it's all pretty fresh on our minds today with all this volatility in the stock market. So I think a lot of people are feeling the same, fears that they felt back in 2008. If that's you, just type fear into the question box if you would, if that is something you all are feeling right now. Nervous. Kathy says nervous. Long says fear. Stephen says fear. Someone's pissed off. Arlene, all right, pissed off. Anxious. Sandra's anxious. Catherine, Steve, fear. Delayed retirement. David, excited. Okay, Dwayne, you can tell us why you're excited. Julian has fear. Uncertainty is Lee. Sold everything a while back. Michelle. Okay, well, good. So you're going to see some opportunities in here to invest that money wisely. Sleepless night. Okay, so I'm hearing the same. Wow, thank you all. This is great to get that feedback. I appreciate it. A lot of you are saying yes. You're feeling anxious. You're fearful. I understand that. And I was that same way in 2008 when I was calling my advisor saying, hey, the market is headed down big time. Don't you think we should sell? Because it's inevitable that the funds are going to be going down. He had me in like 8 or 10 mutual funds. And he kept saying, no, it's okay. Just hold on and it'll all come back. Well, after my portfolio dropped by 40%, I couldn't take the pain anymore, so I took it out of his control and figured out I just have to figure out how to do this myself because I didn't feel the advisor was being sensitive to my concerns. And this is how I felt. So when I ask you if you're feeling fearful or anxious, and so many of you said you were, I suspect this is how you're feeling today too. So we're going to try to put that all behind us and get on a confident, powerful stance and tackle this head on. Because we must take control. Actually, there's nobody, as you think of it, there's nobody more interested in your money than you are and growing your retirement fund. And I resolved to take control, whether I worked again with a financial advisor or not. I resolved that I would take control and be mindful of exactly where my money was going and how it was being managed. And I've actually done very well myself. So we talked about some of these challenges. I asked you specifically if you were feeling fear and anxiousness. But if there's other concerns on your mind, do you mind just chatting them in again into that chat window? Okay, Chris, can you come, Chris on our tech team, can you come in here because I'm not able to see the questions. So if you could just come help me with that. But lack of confidence is typically what I hear. Timing, how do I know when to time entries and exits? Information overload is always a big one. Lack of time. I don't have a plan. I don't know where to start. Volatility, obviously that's a big one today. So those are typically what I hear. Yeah, someone is saying I sold 60% of my portfolio 2 weeks ago. I'm in cash. Don't know if I should buy now. Sure, I understand that. Okay, so we're going to address all these things. And I'm going to do it via our Chaikin Analytics platform, which we call the Financial Freedom FastTrack. This is on iPad and desktop. The slides I'm going to be presenting today are all taken from the iPad. But we're going to go through these 5 keys to success, and I'll go through one by one, and then I'll wrap it all up in the end with an example that incorporates all 5. But our proven methodology, it's critical to have something you believe in, a plan, a methodology, particularly, these incredibly volatile intraday swings. You don't even know where a stock is headed in the same day, let alone, over time. So it's critical to have a compass, and we call our compass the power gauge rating. It's like a GPS for stocks. It will look at the potential performance of a stock 3 to 6 months out, and then give a rating to that stock, anywhere from very bullish to very bearish. And the way this came about really was after this whole 2009 meltdown. Mark was in retirement. He had created tools for Wall Street. His whole career, which was like 45 years on Wall Street, and had gone into retirement after he sold his company to Reuters. And after the 2009 meltdown, when he and I were getting together, he saw that I took my money out of the investment advisor and put it into a Vanguard, and I stuck it into a S&P 500 index fund until I could figure out what to do. But he said, you guys that are now managing your money yourselves have taken literally millions of dollars, billions of dollars out of traditional brokerage firms and opened up self-managed accounts like Vanguard or Fidelity, and that's fine, but you don't have the tools, you don't really know what to do to manage it, which couldn't be closer to the truth. Because I really didn't know. I always felt the stock market was way too confusing, too cumbersome. I could never learn it. It was way too complex. I mean, I was really intimidated by the whole thing. So this is why we created Chaikin Analytics, is really to give individuals like me the same tools once available only to the pro. And that has really given us the edge, and that's why I'm able to accomplish these types of results. So it's very simple. The rating is very simple on the surface, but there's an awful lot going on underneath the surface. It's basically made up of 4 components, and these are the different styles that investors can adopt. Financial metrics, for instance, is something Warren Buffett looks at very carefully. Jim Cramer is more prone to favor earnings and earnings performance as a barometer for success. But it incorporates all of these 20 factors that you see here. Now, these are the same 20 factors that Mark tested over several years' time out of over 200. And he knew that these were the 20 that the pros used every day when they're evaluating a stock's performance. So rather you and I trying to look up 20 factors of any given stock, the Power Gauge does the work for us. It takes all of that information, puts it into an algorithm, and then it comes out with a rating. And you can get a rating on any of these 4 components, or you can drill down and get the rating, the Power Gauge rating on any of these 20 factors. I highlight these 3 because these are the 3 that I feel are important. And I'm going to show you a couple examples right after I read Cheryl's testimonial. We get awful lot of testimonials. And this one speaks to the time poor. I say we're in a new economy, and the economy is time, and nobody has enough time. I certainly don't. Do you have enough time to accomplish what you want to do in any given day? And Cheryl says she's an individual investor. There's not enough time in my day to do the work Chaikin puts before me in minutes. I am wowed. So let Chaikin do the work for you. I wouldn't even know where to go and look for those 20 factors, let alone know what they mean when I get the answer and how to analyze it and evaluate it. But the Power Gauge rating does that for us. So here I drill down on financials. This is a stock that I own, and most of the examples I'm going to show you today are stocks that I either currently own, like Erie, or have owned recently. But I own Erie. It's an insurance company rather. And let's drill down on the financials. So I can drill down and look at the 5 factors that make up that financial component. And here is price to sales, which is very bullish. So that's as good as it gets. Now, why is that important to me? Because this is what you would pay for $1 in revenue. And a lot of the stocks, particularly the internet stocks, Pandora, Yelp, they're very overvalued. And we don't even need to understand what it really means, but what it's saying is that you're paying too much for $1 revenue, bottom line. And so I feel that's very important to have that in a bullish category. The other 2 that I zero in on are from the expert opinions. They are short interest, which you can see here is very bullish, and insider activity, which is neutral. So the short interest is important because the short sellers are considered the smartest guys on Wall Street. I mean, they are betting on the stock going down. So they really have their finger to the pulse. So I want them not to be betting on the stocks that I'm buying because I don't want my stocks to go down. So just know that green is good because it's a little bit convoluted, the dynamic with the bullish if it's not going down. But green is good. So you want your short sellers not to be selling your stock, which means it's bullish. Insiders, on the other hand, know an awful lot about a company because they work there. I mean, who would know more what's going on with management and sales and management decisions than somebody who's involved in the company? So I always like to look at these 3 before I buy a stock, and I like them to be bullish and the overall rating to be favorably very bullish as is before I buy a stock. So those are the criteria that I focus. Now, how do you know this power gauge is reliable? Well, we've done all sorts of testing, and you can go to our website, chaikinanalytics.com, and go into power gauge rating, and you'll see all sorts of tests, both in real time and model performance. But if you bundle them all up for the last, what's this, 15 years, 16 years, what this means here is if you were to have bought only very bullish stocks in each of the last 15 years, your portfolio would be up an average of 20% each year. Likewise, if you only bought very bearish stocks, your portfolio would likely be down almost 1% a year. And remember, this is compared to the S&P 500, which on average is up 7% a year. So you can see that by sticking with stocks that are bullish or very bullish, you're outperforming the odds. You're putting the odds in your favor. So that's part of our whole methodology, and the power gauge has proven that works. But equally as important, and perhaps even more important, is the association we have with NASDAQ. And NASDAQ came to us a couple of years ago and said, hey, we're pretty intrigued with this power gauge rating. Let us test it, which they did every which way to Sunday. And they liked what they saw, so they said, look, would you create 3 indexes for us based on the power gauge rating? In other words, take our large cap, small cap, and dividend achiever index funds, overlay the power gauge, weed out the neutrals and the bearish rated stocks so that you're left with only bullish stocks. And let's put those into an index and see how well they perform. Well, they've outperformed really well. I mean, anywhere from 50 to 70 some percent outperformed their benchmarks. So the power gauge has a lot of validity and is something that I certainly have confidence in, and you can too. In addition to that, we are quoted and seen on all of the major media. Mark's on CNBC.com practically every week with Evelyn Ching in her column. And we're probably going to be in Barron's this week, if not this week, perhaps then next week, with Mike Hogan. He just interviewed Mark yesterday for an hour and a half on Chaikin Analytics, and he was blown away by it. So, we're looking for a really great review coming out in Barron's, possibly this Sunday, but it could be next Sunday as well. So are you all with me? Is this all making sense? Does the power gauge rating make sense to you? While you're doing that, I'm just going to run get Chris. Okay, I'm back in business. Thank you for bearing with me there. Okay, let's see. You all are telling me, I was asking if the power gauge rating makes sense to you. There are too many crooks posing as stock gurus. What makes you different? Well, you're seeing it right now, Vasal. Power gauge is our unique difference. Okay, I'm going to keep going here. So number 2 step is to play offense, and by that we mean you want to buy a classic bull. So what does a classic bull mean? Well, in our methodology, it means a stock that has a power gauge rating that's bullish, the price is trending up, has strong money flow, and a strong relative performance. And you can see I'm using this American Woodmark as the example that for last year. So let's zero in on American Woodmark. But first I'm going to show you this Wyckoff chart. And I love this because Wyckoff created this trend line over 90 years ago, and it still is relevant today. So the stock market has not changed. You know, the way people buy and sell, the way a stock moves is the same as it was 90 years ago and probably, you know, well before that. But basically what this is telling us is that a stock doesn't go up, you know, straight up as this line indicates here, this dotted line, but it zigzags. You know, it goes sideways, it comes up a little bit, then it pulls back, comes back up, sideways, up, back. So I call this zigging and zagging. And when you're buying a stock, you know, you want to buy it when it's down here. You know, you want to buy it when it's dipping down, and you want to sell it, you know, when it's zigging up. And there's an overbought, oversold signal on our charts that help you identify that, which is right here. This overbought, oversold measures that volatility of a stock price. So you basically want to sell it when it's up here. As you can see, it correlates with a higher price. And if you were to buy it, you want to wait for it to pull back and do one of these little dips. And you can see they always pull back. They don't go straight up. You know, this is orange line is this 200-day average line. That's not the way a stock moves in real time. It does this. It zigs and zags all over the place. But for stock that you're interested in or want to hold on to, you do want that trend to be going up, obviously. So let's drill it down on American Woodmark. I had this on my watch list, and I'm going to show you in one of the later steps how I find these stocks to begin with, to put them on a watch list. But I typically put a stock on a watch list, watch it for either a couple of days and sometimes a couple of weeks, sometimes a couple of months until I'm ready to buy it. So I had this on my watch list, and then I got this buy signal. These are these little triangles you see along here. We have 6 pairs of different criteria that will trigger a buy signal. This is saying that this stock is oversold, so it's a good time to buy it. So I bought it down here when it was at 54, and it kind of went sideways for a while, but you can see that there is a persistent green power gauge rating, bullish power gauge rating. So the power gauge rating is saying this stock is likely to outperform the market over the next 3 to 6 months. And as part of that backtesting question, in particular for you, Velis, who were questioning how this works, all you have to do is look at the power gauge rating and look at the price. And if the price correlates to a movement up over the next 3 to 6 months, then the power gauge is telling you the right thing. Now, it's turned neutral recently, and you can see how now the stock has pulled way back. Relative strength was one of the other indicators that we always wanted to be strong. And we've done these in color codes, as you can see, you know, with yellow, red, green, to make it easy. You know, if you were to chart this for a professional, or look at the research rather that a professional looks at, I mean, there's no way I can make sense of all those numbers and stuff. But the green and red is really clear. So you want a stock to outperform the S&P, and the green indicates that it's doing just that. If you're not going to outperform the S&P 500, you might as well just buy a Vanguard or Fidelity or whatever S&P index fund and put your money there. But if you're going to invest in individual stocks, you want to outperform that average of 7% a year and find stocks like this. And then money flow. This is the indicator that Mark created 30-some years ago, and this is really how he made his reputation on Wall Street, and it's on every technical analysis package worldwide. But what this does is this measures the flow of institutional money in and out of a stock. So these period of, I call them mountains, green mountains, are when the institutions are buying. And that's important because they buy in big volumes. You know, the volume that you and I as individual investors can buy in, it doesn't affect the market. But the big institutions, you know, they sell and buy in such big blocks that they do affect the price. It's all based on supply and demand. It took me a while to figure that out, but I used to market cosmetics and fragrance, and an ounce of Karl Lagerfeld fragrance was $100, whether you bought it now or whether you bought it 6 months from now. But that's obviously not true in stocks because it's all based on supply and demand. So if the institutions are buying, that tends to jack the price up because there's more demand, there's less of it, and that puts more strain on the price. Likewise, if they're dumping a stock, if they're selling it, like you can see, this is a big chunk coming out here, and look what happens. There's a lot of downward movement in the stock price. So these are the things to look for. Now I sold it up here right after they reported earnings, and I made a nice 25% profit in 3 months. That came out to like $3,800. And I really like this stock. So I said, I want to get back into this stock. So I bought it back. I could put it back on my watch list, and I bought it back November 11th, again when I got this oversold buy signal. And then I held it. And I bought it back, you see, because everything's green. Once these indicators all line up, there's a good opportunity for success. And they reported earnings, and they did spike up about 20% when they reported earnings, and I sold it again up here. I love to do that, and we're in earnings seasons now. So when you are trading these stocks that have these bullish patterns or classic bulls, and they're reporting earnings, there's a really good opportunity to ride that quick wave up and then sell it, which is what I did at both times with American Woodmark. And you can see what's happened since. The power gauge has turned neutral. The relative strength is starting to underperform, and there's a lot of money coming out of this stock. Now, obviously, everything's pulled back in 2016, but this stock is down more than the market. It's down 18% year to date versus the market, the S&P 500, which is down 8 to 9%. So I'm glad I did not stick with the stock. I made the right decision in selling it up there at its high because it's now pulled back significantly. So let's look at another stock that I currently own. This is Activision. This stock rose 94% in 2015. It's now down. It's down 10%, so it's pretty comparable to the S&P. But things are green. It's had a pretty persistent year of a bullish power gauge, so it's saying this has a strong likelihood of outperforming the market. Relative strength has been extremely strong, and money flow has been strong with a little bit coming out, and it's not, we don't get alarmed if there's a little bit of money coming out because that's typical in the ebb and flow of a stock. But if there's big chunks, like this chunk going in, that's something to look at, and that typically correlates, as it did here, with the rising trend. So I'm fine with knowing that there's a little bit of money coming out and knowing that this stock has pulled back. As a matter of fact, it triggered this buy signal a couple of days ago. So if I wanted to invest more, that would have been a good time to get in and invest more. I'm fully committed now with my 8 or 10 stocks, so I really don't have cash on the sidelines to invest. But if I did, I would consider this because everything is so strong. This is also on Motley Fool's top 10 stocks of 2015. It's actually the number 3 stock. So, that was a great buy in 2015. Okay, First Solar. Now this is in the energy category, and this is obviously in the solar, provides solar panels, and there's been a lot of tax credits recently given to solar energy companies. The energy companies as a whole are not obviously doing well, including solar. This is kind of the one rose amongst the thorns. But this has such a strong chart pattern here. You can see that it's had a persistent power gauge rating since October. The relative strength kicked in about the same time, and so did the money flow. So you can see when these 3 indicators all line up, look what happens to the price. It goes from like 50 here, all the way up to like 72. So I bought this back in August at 52. went all the way up to 72 up here, and it pulled back. So, and I got this second buy signal here, oversold buy signal. Last week, I got it on Friday. So I bought more. It pulled back to 59. And I thought, wow, everything is green. Okay, talk about having a plan. I mean, are you getting this? Can you see that having these indicators be so strongly green would give you the conviction to say, I can buy this stock on Friday in the midst of all these violent market moves and swings. So many stocks are down 30, 40, 50%, but I'm confident buying this stock that it's going to go up because I've seen these indicators. I mean, if you're seeing this pattern, just say, just put pattern, if you would, into your question box, and let me just make sure that I'm being clear here. Okay, great. I'm seeing a lot of pattern. Awesome. Great. Okay. Thank you. That's cool. Okay, by the way, First Solar was up today. It was up 3% today. On a day, the market was up. It was up about 0.5%, but it went up to 63 today, on a pretty flat day. So, that's where the conviction in these classic bulls can really pay off. Okay, on the flip side, and this is really important now because there are so many downward moves here in stocks. So what to avoid is the exact reverse. I mean, and you've got a Macy's slide here with a sell signal that just triggered today. So let's go through a few of these examples. Again, the Wyckoff pattern is similar to the bulls, except of course it's going down. So it does the zigging and zagging across, but it tends to go down more than it goes up. Let's look at Yelp. This is a classic example. You can see it's had a very long period, the full year, of persistent bearish power gauge rating. It's underperforming the S&P 500. And for the most part, the institutions are selling. A little bit of peak here in buying. And you can see that bumped the price up a little bit, but then as soon as they started selling again, it all came tumbling back down. So, these are the stocks you want to avoid. You don't want to be in a stock like Yelp. It's gonna come back and bite you. Now, I highlighted this July 30th sell signal here, where there was a money flow sell that was triggered, and you can see the drop from it, because that triggered this comment from Mike, again, one of our testimonials from a fairly new subscriber. I think he'd only been a subscriber for a couple of weeks. Yeah, but he said he had more success with Chaikin than he had in the rest of the year. Biggest win of the day was on Yelp. And in Mark's weekly commentary, which our subscribers receive as part of their subscription, Mark gives specific buy-sell suggestions. And this was his featured sell of the week, and Mike put a option trade on it. And he sent us his actual statement as proof. So let's look at a few more bears. SolarCity, I added this red line. This is what we call a personality change, and this is when the factors affecting the price go from good to bad or from bad to good. And in this case, you can see they were green with a neutral power gauge rating. But look what happens here to SolarCity in June. Money flow turned negative, relative strength started underperforming, it went to bearish and stayed pretty bearish the most time, and you get all these sell signals going the way down. So if you would own this stock, say instead of, say First Solar, First Solar was up, what did I say? First Solar was up 48% last year. SolarCity, was down 29% last year. So even in the same industry group, you can find these wild patterns. But this is exactly what you want to avoid. And this is your warning signal. When you see these indicators line up this way, you know the party's over and time to sell. And if that didn't convince you when a sell signal comes along, then you really want to consider selling. And look at Wynn, Wynn Resorts. This has just been a classic bear for well over a year. It's like the worst chart imaginable. But you did get all these sell signals. If you weren't convinced by the power gauge and relative strength and money flow, it's screaming at you to sell or play options. We have an options overlay now on Chaikin Analytics that we added at no extra cost this past fall, and Joe is going to take you through some examples of it during the Q&A. So stay tuned, because these are great candidates for options, and our subscribers have been making a lot of money, betting on the way down, and this is how they find the loser stocks to trade options on. So George here made over $2,200 in his first week and a half, and one of those was on these bear, call option spreads on Wynn, among a couple of other stocks. And this is hilarious. I'm a cheap bastard, so I don't sign up for a service often, but this is invaluable, so I always get a kick out of reading that. Okay, so how do I know when to sell? The power gauge turns neutral, and another indicator like money flow or relative strength turns negative. Certainly when I get a sell signal, or the price drops below that orange line, and I'll show you on the next slide. Or I put in a mental stop loss. If the stock goes down more than 10%, I think about selling it. Although in this environment, everything is down, and these are really great stocks that I continue to own, so I'm not selling them. So I don't put in any automatic sells on anything, because I would have sold everything and taken some losses. So I don't want to do that. I want to be in control of when I sell. But it's a kind of a mental picture in my mind of what I paid for each stock and where that threshold is. So let's look at Apple, because Apple is the #1 favorite stock, not only by individuals but also by professionals, and we always hear about it. Now, I've been including Apple on my presentations ever since the spring. And I've been not favoring Apple ever since the spring, because look, it's had this sideways move since like February, March. But some of the way it was a bullish power gauge rating, then it turned to neutral, but the relative strength was still strong. But remember, I said if the power gauge turns neutral and one other indicator turns negative, like money flow, then I think about selling. So if I had owned Apple, I would have thought back here when the money started coming out and the power gauge turned neutral, that this might be a good time to exit up here at around 127 or so. But surely I added this line here. This isn't part of the program, but it goes through what we call this personality change, the end of July, when you continue to have the neutral power gauge rating, but that's when the relative strength said, wait a minute, this stock is now underperforming the S&P, and you get a sell signal. So that certainly should have warned you, if you owned Apple, to get out of this at 124, and the stock is now 97, so it's down 22% from that high on July 28th. So you could have saved yourself a lot of pain following this methodology and listening to these signals and getting out up here rather than riding this stock all the way down into the 90s. That's really painful. And there's no positive outlook for Apple. It's negative, and neutral. That's not a recipe for success. I'd rather put my money in green rather than yellow. I mean, that's hopefully by now your eyes are getting used to these, watching these stocks, and you can start seeing the patterns yourself, because I can now go to a stock chart and literally in 3 seconds I know whether to stay on it or click off of it. So here's another one I would click off real fast, Kinder Morgan. And I have actually a funny story about Kinder Morgan. But just to explain this chart here, bearish power gauge rating, underperforming the S&P, and strong money flow exiting this stock with sell signals along the way. So Mark and I are at an Invest Like a Monster conference in October out in San Antonio. I was speaking there, and we had a booth, and let's call him Larry. Larry came over to the booth and say, show me this, show me this power gauge rating and how this works. So I was helping somebody else, but I could overhear Mark talk to him, and he pulled up Kinder Morgan and he said, this is a classic, bear. This is a stock that you don't want to be into. And he said, oh, well, I own Kinder Morgan. And Mark said, well, okay, well, our power gauge rating is showing negative. It's underperforming, and there's a lot of money coming out, and it's in a downward trend. Look, there's a sell signal that just triggered today on it. Well, Larry felt very confident that he knew exactly what was going on with the stock. He said he'd done a lot of research on this stock, and he had confidence that this stock was going to come back, and he wanted to keep it because it had a high yield, had high dividends, it's 17%. So Mark said, well, what would happen if, the stock, because of this underperforming, starts to cut back their dividend? Oh, no. They're not going to cut back their dividend. I've done a lot of research on this. They're not going to do that. So Mark said, well, this system is really not for you. This is not appropriate for you, because unless you've got confidence in it and are going to go by what it says, you're wasting your money. So that was Larry. So Larry now rode this stock all the way down. It's now 13. It was back in October when we were at this conference. It was 33. But Larry thought he was smarter than the model, and he's paid a heavy price for that. So it's also one of the 3 worst high dividend stocks in Motley Fool's article at the end of last year. I mean, that's not a list you want to be on. You want to be on the Activision and the First Solars like I am, which were on their top 10. You don't want to be on their bottom 3, the 3 worst dividend stocks. The other 2 were Freeport-McMoRan, by the way, an energy stock, and Hewlett-Packard, both of them down big in 2015. So, these are not the stocks you want to be in, Okay, so is everyone clear on the bulls and the bears? Is this all making sense? You can see the difference between the bullish trend and the bearish trend. If you can, maybe just put yes. Awesome. Okay, great. Well, we'll keep moving here. That is great. So step 4 is to use industry group strength. Now, independent research has shown that if you invest in strong stocks in strong industry groups, you will tend to outperform Oh, I hope not. It's not still on, is it? Put it back here. You are unmuted. Okay, we're back on now? Okay, great. Thank you all for staying with us here. All right, I think I was on industry groups. So I was saying you can find these strong industry groups by our industry group list, or you can also go into hot lists. And I don't have the time today to go into this with you, but when you subscribe, Joe will take you through exactly how to find these lists and how to use them to your advantage. But here's the easiest way to do it. You really don't even have to do it by hot list or industry group. You can go into what we call a new screener, and you can put in the parameters that you feel are important. Now, what I feel are important are I want the stock to be in a strong industry group, right? That's the step 4 methodology that we're on. And then here are the other things that I want to see in a stock. Power gauge rating of bullish. Now, these are the 3 factors. Remember, step 1, we went through the power gauge rating. I said these are the 3 factors I feel are important. Price to sales, short interest, and insider activity. Well, I want those all to be strong. And I also want money flow to be strong and relative strength to be strong. Now, that's a tall order in today's market. So I hit the screen, and I get these 3 stocks. Usually, you'd have more of a list of like anywhere from 10 to 15 stocks. But given where we are in today's market, we got 3. So let's just flip through these 3. I can then save them as a list on my desktop, and I'll show you at the end when we go to the Q&A. I'm going to get out of this PowerPoint and go into the live desktop version of Chaikin Analytics, and I can show you how easy it is to execute a screen and then save that list to your computer, which is what I did. I saved it to my platform, rather. All right, so then you flip through these charts. This is Outmost Energy. I know these all have the criteria that I'm interested in when I'm looking at buying the stock. This one, Entergy Corp, actually triggered a buy signal today, a money flow buy signal. So what I do when a signal is triggered is I say, well, gee, what happened in historical times when that signal triggered? The only time a money flow buy sell triggered for this stock was here, and yes, it did equate with the drop in the price. So that gives me a little bit of a guideline as to whether that signal is reliable or not. I was going to explain this orange line too on the Apple chart, but let me do it here because this was one of the criteria for when I buy or sell. When a stock rises above that line, that's a really good time to consider taking your profit and getting out of the stock. Likewise, when it goes under this trend line, it's a time you might consider selling. In this case, it's above the trend line. And I'm not sure what this stock did today. I took this slide this morning. But that's the way I would evaluate this stock. New Jersey Resources is the 3rd of those 3 that the screener found. And you can see this is really strong. And you can see by this oversold indicator here, you want to buy it. Remember, when it's down here on a dip, that's what it's telling you. Strong money flow, strong relative price, very strong power gauge rating. So, everything is a go with this stock. And you're getting a buy signal. So, that's an idea. Put that on your stock list and watch that for a couple of days. With the signals, you're not married to acting on them in a day or two. You can look at that over a period of a couple of days, maybe even a week, and that's oftentimes what I do while I'm evaluating whether I want to buy this stock or not, because it usually means I have to sell something else to buy it. All right, let's look at this testimonial we got from one of our subscribers. I'm running to tell you how absolutely incredible Chaikin has become. It started great, but with the options and screener additions, and we just launched both of those this past fall, I feel it's absolutely the best product on the market, and I've recommended your product to all my investing friends. Doesn't get any better than this. Okay, great. All right, now we're on the signals, the last of the 5 keys to success. And I have been pointing out those buy-sell signals all along, so I'm not going to go through them anymore here other than to say, well, how do you find them? Well, we have what we call an alerts view, and you can overlay that on any stock. Remember, I told you I keep a stock list of stocks that I own, 8 to 10 at any given time, and also a watch list. And I overlay this alerts view here, this little bell filter, onto both of those lists every morning and every evening. And then I flip through the charts. But this highlights immediately anything that could be actionable on that particular stock. So it's telling me on my watch list I've got 2 buy signals on one stock, FBNC. It's telling me a rating has turned bullish on Erie. I'm keeping it on my watch list as well because I'd like to buy more when the price is right. And then it tells you, various things like that. Here's telling you that Expedia is a breakdown signal. So it gives you information that can affect the price. And that's why I look at it every day, and then I just flip through those charts. So let's recap the 5 keys to success. And as Joe said, this is being recorded, so we will send this out to you tomorrow. But you might want to write these things down just to embed them into your mind. Methodology is the Chaikin power gauge rating. You want to rely on that. You don't want to be Larry and say you're smarter than the power gauge rating, because that's unlikely to, no offense, but that's not likely to happen. You want to have a methodology you can trust, which is the power gauge rating. You want to play offense, that's to look for that classic bullish pattern. Particularly today, it's critically important to play defense and look for that defensive posture and get out before things get worse if a stock is heading downwards. Use industry group strength to put the odds in your favor, and use the signals to help you time the exit and entries. So we are now at 5:15. We lost a little bit of time because of the the technical glitches, which I apologize for, but I would love to show you on the example of Southwest Air. That's one of the 2 highest growth stocks in 2014, which I owned. I'd love to walk you through how I bought and sold that over a course of like 9 months, because that incorporates each of these 5 keys. But it's going to take us a little bit, over time. So is that okay? Can you just say go if it's okay to go with this example? Because it'll take us a few more minutes. Okay. Okay, great. Okay, great. Thank you. Okay, so everyone is saying go, or a lot of people are saying go. Okay, so I bought the stock back in June of 2014 at 25. I'd had it on my list, and here's where I bought it when it pulled back. Remember, you want to buy things when they pull back. I had it on my watch list. Transportation Air was one of the strongest industry groups at that time. I think it was number 3. It's now way down there on the list. As you all know, the airline stocks are getting crushed. But at the time, it was very high. Mark had recommended it in a market insight, so I had it on my list. And then I saw this pullback. So everything lined up beautifully. So I said, well, I'm going to buy this stock. So I got in at 25, and then I added to my position here. This is September of 2014, and I bought more in here at around 33. Again, I got another signal here, a buy signal. So I said, well, gee, everything is so strong with this stock. I mean, look at all this green, and it was oversold, so I could buy it on the dip. So I bought more, and then I don't know if you recall a year ago, October 15th, with the whole Ebola panic, when the first patient was diagnosed with Ebola in Dallas, and that is where Southwest Air is based. So it's a huge hub for them, and the stock, pulled way back. Most stocks did pull back, but the airline stocks got particularly hard hit, and this pulled way back to like 28. And I said, wow, there's nothing wrong with this stock. Institutions were selling because they all had those automated orders, and relative strength was still strong. and say for a few days that it went to neutral, it has a strong power gauge rating. So I said, this is a great stock. There's not a thing wrong with this stock. It's panic that's fueling the frenzy, and I'm going to take this, use this in my advantage. So when it started coming back up again, I bought more. So I bought more in here at, I think it was 28. I mean 28, I'm sorry. Yeah, I bought it in here at 28 when it started rising again. Now, interestingly, Mark was meeting with a hedge fund out here in Philadelphia during this time, and he said, oh, well, you know, my wife just bought more, and they said, oh, well, we had this in our hedge fund, and we sold it down here at 28 on October 15th with that whole Ebola panic. So here a hedge fund is selling this, and me looking at this screen with my 2 years of experience in investing in stocks is confident buying this, pulling the trigger and buying it. That's the type of confidence I'm talking about that I want you all to have. That's the type of confidence I have, and I still have. That's how I bought First Solar last week, because I had this same kind of setup. Everything was green. So I rode it all the way up, and then things started to go sideways. Let me go to the next slide here where I've got the signals on it. So I started selling it in March because you can see what happened. This is February now of 2015. And you can see what happens here. It started to go sideways, and then it started to pull back a little bit, and the power gauge turned to neutral. So I had a very big position in this stock. So I said, I better sell some of it. So I sold half here at 45 on this zigzag up, and then it did a little bit more zigging and zagging, but then look what happens here. Relative strength turned negative, and money flow is already negative. And then I get this sell signal here. So I said, man, the party's over. I'm out of here. So April 21st of last year, I sold the balance at 43 and made some really nice profits. The stock is now 40. It had turned positive. It had a nice ride up, but then it turned neutral, and now you've got negative money flow. And they reported earnings. I think they had a pretty good earnings report today, but the stock is still in the four. It didn't really affect the price that much. Oh, it did, 2%, and it's around 40. So I saved myself, that whole pain of going down a year to 32 and riding it all the way down. So that's how I incorporated all of those 5 keys. So I hope that gives you the edge that you see you can get with Chaikin Analytics to make those type of confident decisions, both getting in and out of a stock at the right time. So I promised to you that I would show you how to gain confidence and find winning stocks, and I hope I've made good on my promise. And it's all about not only saving for retirement, but having some fun along the way. So think about how you're going to spend your profits. Think about how you're going to spend a profit, say, on a stock like First Solar this year. What's on your wish list? So a few more testimonials here. This is another new subscriber that just this past December. He thinks of getting Chaikin for free because he says, thank you for giving me the confidence. And I highlighted this, I never had. I mean, that's what we're all about, giving you confidence. And I wonder how people miss a tool this accurate and how it is that you give this out for free. Free because the $1,900 subscription fee is nothing compared to the ROI you get using it. So, we believe in that too. Rex here followed an Amazon trade, and this again was a short sale or an option trade. And he made enough profit to cover next year's total cost of 2 months in Hawaii. Pretty awesome. I covered 2 weeks in in Turkey last year, and I thought that was great. And another subscriber says, in the 5 businesses that I've been using Chaikin, I've paid for the subscription over 10-fold. These initial results are nothing short of astounding. Please extend my thanks to the entire team. So the question is, will you be our next success story? Are you going to invest in yourself and also enjoy these types of returns, both on the upside and getting you out of those disasters that can really just destroy your overall performance? So Financial Freedom FastTrack. This is our workstation powered by Chaikin. It's showing you here the options play, and please stay around because Joe's going to show you how he uses Chaikin to trade options. And let's just pause for a second and identify who this is not for. This is not for the Larrys in the audience who think they are smarter than the workstation, that think they know more than the model does. The model and the market rule. And if you're not willing to honor that, really investing in stocks is not the right thing for you, not the right place to put your money. It's not for somebody who thinks they're going to get rich really quick, a rich scheme. But what this is for, who this is for someone who's serious about their investing, who can follow a 5-step methodology and gain the confidence from doing that, and who is serious about making money. Investing in the stock market is serious business. So if you've already made that commitment by being on this webinar. So I have a feeling that you all are serious about your investment and want to improve your portfolio performance. And if that is you, then this is the right next step for you. So what does this include? Well, as one of those testimonials said, that the analytics is $1,950 for a year subscription. We're going to offer you a special rate on this, so please stay on. And it includes options, the options play. These are research tools I haven't even had the opportunity to get into, but Joe, when you subscribe, will take you through what each of these research products can do for you. I highlighted the coaching calls and the one-on-one calls because this is I think this is gold. This is the golden nugget that Chaikin has to offer, because we really want you to be successful, and that's Joe's job, is customer success. And he works with all of our subscribers, both on coaching calls in small groups, so that when you subscribe, you can get on a call as soon as tomorrow. I think it's 2 o'clock. Tomorrow is his next coaching call, so that you get up and running right away, and so that you understand the system, because we recognize that nobody has time, and the thought of learning a new system and educating yourself can be a little bit overwhelming. So we want to ease that learning curve for you. We get you right in, and then we do one-on-ones. And Joe just told me at lunchtime today he's scheduled an awful lot of one-on-ones because people are nervous. And they have fear in the market, and they want to go through their portfolio with Joe and see what the Chaikin methodology says about it from a third-party view. So these are some of the benefits that you can gain with Chaikin. As I said, it's usually $1,950, but we're going to add in a few more things, which is the screener. We added the screener at no additional cost. And I think you saw how powerful that was with that example that I gave you. And we also have a daily, what we call morning insights from our chief market investment strategist. And John puts this out every morning. He gives specific buy-sell ideas and his commentary on the market, as Mark does on his Sunday weekly commentary. So you get commentary from us 6 days a week. And instead of the retail value of $1,950, we're going to give that to you for $1,650 a year. But we do need you to subscribe by midnight tonight in order to make that offer valid. So I think we'll go now to our questions, and know that our sales force are standing at the phones to take your questions and to address any issues that you might have with Chaikin Analytics. But I do hope you'll get on board and build Chaikin Analytics into your portfolio, so that you can start protecting your portfolio, and not only protecting it, but profiting, even in these volatile markets. All right, Joe, I can switch over to the live workstation right now if you want to take some of the questions while I'm doing that, and then we can switch screens and you can show the options. Should we do that?
Sounds great. Awesome.
Okay.
Now I'm going through some of the questions, looking for some specific details here. I know some of them are commonly questions in particular. The offer that Sandy just made is for a full year to Chaikin Analytics, just that one-time payment is all it would be. And certainly, like she just mentioned, the screener, the options play function that we're going to look at in just a moment, that is included within Chaikin Analytics. Now, there are a few stock requests, Sandy. I know sometimes we like to start out the Q&A session with some specific stocks. Would you like to begin there?
Sure.
How about we go ahead and take a look? I know, as you can expect, we always get requests for Apple. So why don't we start with Apple right now?
Okay, I did cover this in the When I Know When to Sell, but let me quickly go over it because you must have missed that part. Okay, so Apple. This is not a stock we have been positive about since the spring when it started going sideways. Money flow kicked in, negative here, negative now, underperforming, neutral power gauge rating. This is one I've been saying I would not own, and if I had owned it, I would have gotten out up here in the spring because it's going sideways and it's just not a good outlook. Then you get these sell signals in here if you did own it, and it's gone now down to under 90. So was the question in reference just to look at the chart, or was there some
I didn't see any
thought about
I didn't see any specific details about it. I just saw a few requests here for what we can expect from Apple going forward.
Okay, well, I'm not an analyst, but I am saying this is not a stock I would invest in. Absolutely not.
All right, great. I can definitely understand that.
Just to make that clear.
Yeah. I see there's a question. I know a few questions about some financial stocks here. Would you mind taking a look at Citibank? Just the letter C is their ticker symbol.
Okay. Whoa. Yeah, the bank stocks have been getting killed recently too. Yeah, that's power gauge has turned positive just since Tuesday, but relative strength is still weak and money flow is weak. So eek. I mean, this is not a stock I would want to own. I mean, what you can do is overlay these signals on it. Oh, now this is interesting. I would need Joe, either you or Mark, to comment on why this triggered an oversold buy signal.
Sure.
A couple of days ago. I guess it was when the power gauge turned positive.
Yeah, so I know a few things that I've been noticing during trading sessions with Citigroup, actually.
Good.
Right now, with an oversold buy signal, there are three things that we look at. Certainly, we want a stock in an oversold position, but we're also looking for a stock to be on a short-term low, which it looks like Citigroup, along with a lot of other financial stocks are, and obviously the bullish rating, like you mentioned, Sandy. Something important that's also to pay attention to is if you pull up the SPY, so for the S&P 500, you'll see that the overall market is also in an oversold position. So if you look at the overbought oversold indication, and then you look at where the market is right now, you're noticing that they're both showing some initial signs that perhaps we're starting to meet our support point, kind of like what Mark Chaikin mentions in his Market Insights article. So I think that's a sign that, again, you may start to see a bit of a turnaround, not just in the overall market, but specifically for Citi as well, especially with that oversold buy signal coming into play. That'll be one to keep an eye out for leading into next week.
And there's a little bit of money flow now coming back into the S&P.
Yeah. So definitely a good sign, at least a pretty strong trend to be aware of going forward for the short term.
Yeah, that's a great point. Thank you, Joe.
Mm-hmm. Let's see. I know along the lines of, I know we have the SPY ETF here. I see there's a question about the financial sector as a whole. I think that's a good opportunity to, why don't you go ahead and show where we can access the balance of bulls versus bears for the different S&P sectors.
I'm going to let you do that,
Okay.
Joe, since you do that every day on your presentations.
All right.
If you're okay with that.
Yeah, absolutely. Yeah, let me go ahead
and then you can segue right into the options play.
Sure. All right,
Okay.
bear with me for just a second, and I'll go ahead and show my screen here. Let's see. All right, so here is my Chaikin Analytics screen. And so what we mentioned again, there's a few financial stocks that I noticed. Now, as opposed to going stock by stock and just getting a sense for how each of these stocks are shifting, what you're able to do is whether you trade ETFs or not, you have the ability to determine the condition of the overall sector. So what I did was I just searched right here to our ETFs group, Spider Sectors, and what we have listed here are 9 sectors along with the S&P 500 itself. And what you're noticing here is simply a reference to the number of bullish stocks, neutral stocks, and bearish stocks. And the way that we organize these groups are the ones with the greatest bullish correlation at the top and the most bearish one down here at the bottom. So utilities right now, 6 bulls and 0 bears, and energy all the way down here at the bottom, not a single bullish stock and 26 bears. The question that was asked was specifically for financial stocks. So what is their condition right now? Well, pretty much evenly split, 14 bulls and 14 bears. What you're maybe interested in looking at is just like we looked at the SPY, when I click on the ETF here, XLF, I can now see the condition of the overall sector. So you're noticing that it's, again, below its long-term average, very similar to what we saw for Citi. Relative strength, again, is also weak. So just like Sandy mentioned, financial stocks have really struggled since the market correction back in August. Institutions are mostly negative, but you're starting to see a little bit of a positive trend. It'll be interesting to see where that goes over, again, the next week. But again, the key thing here is that you are in an oversold position, saying that, you know what, you may have found the bottom right now for not just the sector, but ultimately the market as a whole as well, potentially. So again, these are nice leading indicators. You know, longer term, it's going to be a different conversation. But at least for short term, maybe if you do currently have, bullish stock, any of these financial stocks currently in your portfolio, if you're wondering what is the future for them over the next couple of weeks before we get out of this mess, you can start to get a sense for when the tide is beginning to turn. And I think that's a very valuable outlook to have. So. Now, like Sandy mentioned, let me go ahead and display here our options play functionality. So we're going to change pace just a little bit. So what you might be interested in ultimately are some of these bearish groups. I know we have a lot of subscribers who do trade options. Most people are swing trading them. So they're either shorting a stock or they're buying buying calls or puts. You have it. What I want to go ahead and pick on ultimately is the energy sector right now, which had a good day in the market overall. I know there's been a lot of talk throughout the year. I can't tell you how many subscribers I spoke to who said they're expecting to find the bottom in the market. Well, certainly as a whole, you can see how overwhelmingly bearish Apache is here, right? So mostly bearish power gauge rating, poor relative strength, poor money flow. What I might be interested in seeing is the condition of what options play might recommend for different options trades. So certainly given the fact that the stock right now is oversold, isn't the right time to be really opening a trade right now? This is very beneficial information here because one of the key factors that we coach in our sessions is that you want to be able to qualify a stock. Certainly I don't think anybody's going to argue that energy is bullish right now, but that doesn't necessarily mean that you always want to be opening bearish trades on it. There are times where like that yckoff pattern suggested, you do have times where the market does pull up a bit. So you can see right here at the end of September, not the smartest time to be opening a short or perhaps buying puts on the stock. Certainly a day like today where Apache was up 7.5%, you can see despite all these negative factors, at least for short-term basis, the stock is clearly also in an oversold position. Contrast that with where we were back at the end of December, where you were clearly overbought and you're riding the trend of the overall market as it breaks down. So timing is a huge factor here. And again, options play can certainly steer you out of trouble while also perhaps maximizing. I know one stock I was looking at earlier today was Union Pacific. And Union Pacific's in a little bit different of a position where you do see that options play does give you a favorable score. for some of the trades available here. So this is a wonderful tool if you're just learning options for the first time. If you are an experienced options trader, the benefit of having different strategies side by side here really cannot be understated. It's a fantastic advantage to have, so that not only can you maximize your stock selection within Chaikin, but you can then maximize your options strategy within options play here. So it's a wonderful 1-2 punch, and all of this is included within your subscription to Chaikin Analytics. Sandy?
Okay, I'm still here.
Oh, awesome. Good. Let's see. Did you happen to notice any other questions that we should address before we go ahead and wrap up?
I'm going through them, and I've been able to address some typing in the replies. I think I'm getting through what I need to get through. So I think we're okay here.
One thing I am noticing here, Kathy's asking regarding the signals, are they meant to give you an outlook for the next 3 to 6 months? And I think it's more of a shorter term basis, Kathy. The power gauge rating, it was what gives you a 3 to 6 month outlook. The individual signals more help you fine tune your entry or your exit point. So yeah, it's really the power gauge rating that gives you that longer term guidance. All right. Any closing words before we go ahead and wrap up, Sandy?
I think I just want to thank everyone for staying on through those technical difficulties, and I sure hope I'm going to be reading your testimonials in my next presentation. To your good trading. Good night.
All right, guys. Well, thank you all very much again for attending our session. Have a fantastic evening, and again, we'll see you soon.